work. It is just such an interesting experience. So Scott, you know what I'm going to do is I love when you share work. Oh, we got the echo again. Hold on one second. Such an interesting. There we go. Now we got all the echoes off. Whew. Okay. Now we are to, let's talk mortgages. So I love the first-time homebuyer mortgages and all the zero down programs. And you know, I love veterans and talking about the zero down for veterans. And there's some really neat stuff out there with investor cash flow loans and bank statement loans, and even the jumbo loans with 10% down, which is a huge difference than it ever was before. So I wanted to make sure that we cover all of these different ones, especially first-time home buyers. I think that's really important, but also as investors, so often there's some amazing loans that are out there right now that a lot of investors just don't think are out there because they've thought, oh, well, the market's too hot. It's too competitive right now. This year, 2022, is just seemed like it started off with a bang, with just crazy busy and low inventory. So not a lot of things for people to choose from. So I want to talk about all these different mortgages today. However, Scott, we want to start from the beginning. Who are you? I want people to know a little bit about you. And we've known each other for a really long time. And it's fun to come. Yeah, it's so much fun now when I talk to you because I've seen you you've been at different banks, and I've seen you kind of through all sorts of like first-time home buyers, veterans, all sorts of people. And I'm so grateful to you because you always make sure you have this great team surrounding you. And I think that's one thing we all have learned, especially through this pandemic, is that we need a team, you know, just like our family. We need our family. We need our team around us to help us, you know, make it through all the ups and downs especially of real estate. It's been an interesting time. And even though it's good, it's also been very, very challenging. It's challenging for buyers. It's challenging to find the property. It's challenging for the real estate agents trying to make everybody happy. And for the mortgage, for you and your team, it's challenging again to make everybody happy with exactly what they want, but also making it known what's available. So let's start with your history. Who are you, Scott Shelton?
Good morning, Jennifer. Thanks for having me on. I'm always happy and consider it a privilege to be on the show with you. So I'm Scott Shelton, Security National Mortgage, 30 years in the business. Can you believe that? This year will be 30 years in the business. And so I have to be honest. I have a fresh take on this business. I'm energized. I'm excited amidst all the challenges and changes. So I love what I do every day.
Yeah. And you have a great team. I think it's really neat. Talk a little bit about your team and a little bit about your mortgage, because I want to talk about these crazy investor cash flow loans, no tax returns. What? You know, like there's some great stuff, bank statement loans. But again, I know it's being done. Some people go, oh my gosh, I got a bad taste in my mouth from those words and those things from before. So I want to talk about why they're different as well. But before, let's talk about your team and, you know, who is your bank? Because now you're with a bank, and I say now, it's been a while.
So Security National Mortgage, part of the Security National family of companies, is not a bank.
It's not a bank.
We're a publicly traded mortgage company, just about 30 years old, extremely strong financially. We love what we do. We have some portfolio capability, which we'll talk about in a little bit. My executive team is extremely strong.
Wait, before you talk about your executive team, explain that, because I think even for me, I say it as a bank. What is the difference between a bank and what you guys are doing?
So we're a mortgage company. Mortgage companies usually, they're not banks. Banks have their own ways of getting money, but the mortgage companies are a little different animal. And just an interesting statistic before I go into that, over the last couple of years and recent months, we see a trend of home buyers moving away from banks more to mortgage companies.
Yeah, and that's one of the reasons I misspoke when I said you were with a bank. I've seen you with banks in
Yes,
your
yes,
past
yes,
history.
yes,
And even I say that I misspeak and call it a bank when it's not a bank. And that's why I wanted to address it first, because
yeah,
it's a big difference in the flexibility, at least from my viewpoint, in the flexibility and the things that you can do. Because I just was talking about one of these mortgages last night with some people, and they said, that's not true. And I started laughing, and I thought, oh, it's because they don't understand, again, the difference between a bank and a mortgage company, or a company, again, even credit unions. There's differences, and you need to understand what financial institution you're working with, right?
Yeah, that's absolutely true. And one of the things that I communicate to our internal team, loan officers, processors, underwriters, closers, everyone here, is that we can play inside the sandbox. And to realtors and builders, I tell them we can also play outside of the sandbox. So we have that flexibility with our in-house relationships and that we have set up to do normal conventional FHA, VA, USDA, jumbo loans. But then outside the sandbox, which we call non-QM, we can do investor loans that don't require certain documents. We can do bank statement loans for self-employed. So it's a whole different world to live in. And to be quite honest, with this flexibility, you have to manage it well, because we're not going to repeat and have no intention to repeat the Great Recession years of 6 and 7 and 8 and 9. So that's the difference. As a matter of fact, this week, speaking of something like our investor program, someone had made mention of the fact, Jennifer, that, oh, you guys are trying to recreate that nasty recession market we had years ago. No,
Right.
no, that's not the case. We're not looking to repeat that. We're actually looking at documentation. We're actually requiring a down payment. We're actually saying you have to have satisfactory credit, which is so much different than those recessionary years ago. So no, there is common sense principles. I do see some investors coming into the market that are trying to duplicate some of those old products, but that's always the case.
Yeah.
So here we are. We're in an inventory right now. We're in a market that has very little existing home inventory. First-time home buyers are competing against multiple offers in a rising sales price appreciation market, and move-up buyers are trying to move up, but it's hard to do so because if they sell their home, where do they go? And guess what? We have a lot of investors coming into the market.
Yep.
So
Exactly.
with all those different dynamics, Jennifer, I'm really excited because we have the products and the portfolio to provide homeowners, home buyers, the opportunity to build wealth.
Yeah. And the thing that I love that you say it that way, because also when you say you're excited, I get so excited, even in a market that's challenging like this, because it also, to me, it provides an opportunity for us to be better, at explaining the different mortgages, explaining the different opportunities that are there. And even with our clients, how do we communicate with our clients about what's out there and what would help them and what could be. And one of the examples I want to use, which you and I have talked about before, and you just mentioned, is the USDA loan. It's a loan that is probably I think, one of the most overlooked loans that's out there. It's a really neat one because it's zero down. And even in the Washington, D.C. area, there's places where, and I always laugh because people say, well, you can't use that loan in the DC area. And I'm like, well, actually, let's look at it. So let's take a look on what is a USDA loan.
That is a rural development housing loan with a zero down payment, no mortgage insurance, and it provides flexibility to buyers looking to purchase a home as long as they fit within a certain income restriction. And that's based upon counties across the United States. specifically, let's use the Washington, D.C. area. There are pockets around the D.C. metropolitan area that are USDA eligible. And then there are certain pockets that are not USDA eligible. But then you got to West Virginia, basically all of West Virginia is USDA eligible.
Right.
So you've got to know very well to the detail your state, your county requirements, so that you can offer your home buyer, your customer, your client, the best options. Right. And that's so critical in our marketplace today.
Right. And that's why I wanted to kind of just today, I really wanted to explore a bunch of different kinds of loans and what's happening and what you're seeing in the year 2022, because it keeps changing, you know, as it always does in real estate. Nothing ever stays the same ever. And I think it's really fun because the USDA loan, I think is one that is so overlooked. The other one that's a zero down payment that, again, I'm always surprised when I end up meeting a veteran who doesn't know about the VA loan. So I do want to talk about that just for a minute, and then we'll talk about some of these cool investor loans.
Veterans, in light of everything going on in the world right now, I just want to give a quick shout out to our veterans. The potentiality of any engagement or involvement in what's going on around the world, I am, and I know you are, from the bottom of your heart, Jennifer, so thankful for what our United States military and our veterans do for our country. So having said that, I think the VA loan is the best loan in the marketplace. Yay! Zero down, no mortgage insurance, up to $1.5 million. And you say, well, what veteran's going to buy a house? Well, there are generals, you know. There are different folks who have income brackets within the United States military that can qualify at higher levels.
And there are lots of veterans, I'll tell you for sure, that have gotten into real estate investing or are entrepreneurs in one way or another. And so their income is not just from one source. No. Still being able to come up with that down payment prevents a lot of people from being able to move forward and purchase a house. So looking at all of the zero down payment programs, it's really critical. And especially for veterans, again, I'm always surprised how many veterans do not know about the zero down payment mortgage.
Zero down payment. As long as you have full entitlement, full eligibility, you can do a zero down payment on the purchase of a primary residence. Again, I think it's with no mortgage insurance and no default insurance required for a veteran because of their service to our country. It's actually insured by the Veterans Administration. So I honestly believe it's the best loan program. And even though we've seen a rise of interest rate lately, in our marketplace, it still is a very, very favorable loan program.
And one thing I want to mention, so we don't forget, if you're listening right now and you know someone who's a veteran who may already have a VA loan, you may also want to mention to them. So if you know a veteran and they don't know about this amazing loan, please share the good news. Please share it with people. And the other part of that is if you know a veteran who does have a VA loan, you may also want to know a little bit more about the VA Streamline Refinance. Will you talk a little bit about that, Scott?
There are still some veterans out there who have the ability to refinance their home, whose interest rate may be higher, who may need to take some cash out. So those opportunities exist in our current rate environment, and very little to no documentation. It's a great option to take advantage of as a veteran. And you would call a lender that you trust, or call a realtor that you trust who may know a lender that they trust that can give a referral. It's, again, going back to the team concept, reaching out to your sphere of influence and people that you trust to find out who can most efficiently, effectively, and smoothly present to you the information on the VA loan and close you satisfactorily.
Yeah, I think it's really, really, it's so important to understand what your options are. And sometimes just knowing that there are options, it just can change everything for someone if they're in this situation where they need it.
It really does. And again, goes back to team, having people around you that know how to communicate with the people who are making decisions in our business every day.
Yeah. So let's talk about the jumbo loans that are 10% down and talk about what is a jumbo loan, because anyone who's listening who doesn't understand what a jumbo loan is and why that 10% down is so significant.
Sure. Anytime you make a loan, take out a loan on a conventional loan with less than 20% down, or any loan with less than 20% down, except for that VA loan. And we spoke earlier about the USDA loan, no mortgage insurance. But a conventional loan with less than 20% down, you normally carry mortgage insurance. That's default insurance should you ever stop making payments on that mortgage. With that being said, 10% down, like for example, we have a 10% down payment program up to 1.5 million with no mortgage insurance. And so normally you have to pay mortgage insurance at 10% down. But here in this case, there are loan programs in the marketplace where you do not have to do so, as long as you have the appropriate credit score and the income to satisfactorily qualify to carry that mortgage debt.
I think that is really powerful because, again, so often when you get into those jumbo prices, people are looking for 20% down. And then again, that cash, those chunks of cash can really prevent somebody from being able to purchase. And so being able to have a 10% down program is something that is really valuable. Again, life is about having options and knowing what those options are out there for you. And part of this, when I wanted to go through these, I realized that I found, I hate to say it this way, but I have found so many real estate agents who don't even understand the difference in the loans. And I say that in that way of that, I think the more that as a real estate agent, as a professional, that we know these different programs, we can also help point our clients in the right direction, or just stretch their mind to think, well, wait a minute, you had been thinking about only the thing that would give you 20% down. Have you run the numbers? Have you looked at something that's a 10% down? And is that something that is feasible, again, within your budget and with all the things that you're looking for? So if you don't know your options, so often you can end up just not being able to help somebody in the way you want to. So I found many real estate agents that I talked to. It was one of the reasons that I wanted to make sure that we did this specific show, is to really go through these different types so that, again, hopefully it'll stretch their minds and their thinking, and how can they help another person. And the same thing, if you're just a buyer, and I say just, meaning you're not a professional in this industry as a real estate agent or a mortgage person, I hope that you'll also look at the different ways you can help by knowing this knowledge, because you might be able to run into someone who is a veteran who didn't know about it, or who's in a rural area who could use a USDA loan, which is so exciting, because you should look at it. And again, you can go to the websites and look at these things like VAs. You can go to the Veterans Administration and you can get some basic guidelines, but I highly recommend you call Scott and talk to his team. Him and his team, they have great people. And I know you're always willing to talk to people and go over the different mortgages, right?
Always. And you know I am. It is a misnomer in the marketplace, and you see more and more commercials and different things saying you don't need 20% down to buy a home. And we want to dispel that notion, that thought process, that thinking, because you don't. We have 0 down options. We have 3% down options, 5% down options. As long as you have the income and the appropriate credit score to qualify, it's important that you have a team, a realtor, a lender, and lenders are all over the board. Some can play inside the sandbox and do it extremely well. Some play outside the sandbox and do that extremely well. I like the fact that we can do both.
Yeah.
And what that does is that when I engage with a customer and or a realtor, it helps us to be able to cover all the options. And I don't mind saying, hey, you know what? We don't have an answer for that.
Mhm.
That's not a problem. We don't have an answer for that. And if we don't have an answer for that, I will help to try to find that answer with someone else. And I'm okay with that. So again, we're looking to take care of the potential home buyer, the customer, so that we can help them have home ownership.
Yeah. And it's really important to just be able to know that there's options and to know that there's people who you can talk through the options with and really understand that. So now let's shift gears over to investors. And of course, we'll open it up for questions in a little while, but I wanted to get through the one thing that, again, that I know that scares people: the investor cash flow loan, no tax returns, no income verification, no employment documentation. And I think that when you look at some of that stuff, you think, are we going back to troubled times? The too big to fail kind of bank scares that really tortured and scared many people. So will you talk about these?
So, for example, we have in the marketplace, and like we have one, it's a portfolio loan for investors where the down payment's 25%. And a certain credit score is required, no tax returns, no banks. I mean, we do verify bank statements with assets, but no tax returns, no employment, and we verify the assets. Years ago, Jennifer, I could put a few extra bullet points on there as well, like continue to be a sound company with excellent leadership. And that's exactly what you're looking at when a home buyer comes to purchase a home. Who am I dealing with? So investors, you're looking to purchase a home, and there's tremendous and growing opportunity out there. There are loan programs where you can go with you can go the Fannie Mae, the Freddie Mac route, as little as 15% down or 20% down. You're going to provide W-2s, pay stubs, bank statements, and tax returns. So those options exist through Fannie Mae and Freddie Mac. The other options are portfolio programs or even non-QM, non-qualified mortgages, where they play outside the sandbox and no W-2s, no tax returns, no pay stubs. You just need to show proof of assets to purchase your home. And in our case, we require, since it's an investment property, we require that you show you have ownership over primary residence. So the options are out there. 25% down, we feel as though there's enough skin in the game and a commitment that's given, not zero down. I remember zero down. I remember 5% down back in the day, but that's not where we are anymore.
Not for investors.
Not for investors, but years ago, investors could do that.
Yeah.
No, not anymore for investors. And it's a growing market, and investors are purchasing homes.
Absolutely. So one thing you talked about, the qualified mortgage, and you talked about, being inside the sandbox and outside the sandbox. For those of us who are not in the business, I want you to explain that as
Sure.
if you're talking to somebody who's a brand new first-time home buyer who doesn't know any of our jargon.
Sure. Sure. So a qualified mortgage, usually Fannie Mae, Freddie Mac, requires W-2s, pay stubs, bank statements, tax returns, because those loans by most lenders are sold to Freddie and Fannie in their conservatories, placed in their pools. The non-QM, non-qualified mortgages are portfolio loans that lenders hold themselves. And then the rules are a little bit different. Usually the down payment is a little bit higher to substitute for lack of documentation, or minimal documentation would be a better way to say that. In this case, for example, here's a big advantage. If you, on an investor who lives in the United States, we run a credit report. Investors who do not live in the United States and live in Canada, live in China, live in another country, we do not require a credit report.
What do you require instead?
Proof of ownership of a primary residence with a good payment history.
Yep.
And most times those people who live outside the US, they're called foreign nationals.
Right.
They don't have US credit anyway.
Yeah.
So we just have to show proof that they have ownership of a home and an excellent payment history.
So one thing when we talk about this qualified mortgage, and again, when you talked about inside the sandbox and outside the sandbox, again, I think for some people it doesn't make sense in that thinking we're doing something illegal, or you're talking about doing something illegal. And it's just a matter of the guidelines. And when you keep talking about Freddie and Fannie, I know exactly what you mean, because those are government backed loans. And so there's a difference between that. And will you go into dive a little bit deeper into the difference between, like, with what you do, not being a bank, why you have the option to either do government backed loans, and what Fannie and Freddie, what do they mean versus what you do? Because it shows your magic. I want to go behind the curtain at the Wizard of Oz, Scott. You need to share it all.
I don't know that there is any special recipe there, but I do understand your question, and I'm thinking it through even now as I speak. Definitely nothing illegal taking place. We don't have time for that. Everything we do is we're transparent. And again, like with us, we're a publicly traded company, so we don't have time for that kind of noise. But, with that being said, most folks let's look at the investor program, which Fannie and Freddie has recently increased some adjustments to those programs for second homes and investment properties. The attractiveness of those properties for Fannie Mae and for Freddie Mac are less attractive. So they're making it so that obtaining financing is more costly. Mm-hmm. With that being said, they still require W-2s, pay stubs, bank statements, tax returns, and rightly so, in order to qualify to fit into that bucket or pool of loans. On the non-bank side, there are lenders out in the marketplace, and very good lenders, I may say, out in the marketplace that can do non-QM, non-qualified mortgages that are not attached to Fannie Mae and Freddie Mac, and that can offer loan programs that require a little more down payment, as I said earlier, moments ago, but with less documentation. So they still have a commitment and skin in the game, so to speak, but they hold those loans in their portfolio. That means they don't sell those loans. That means you'll always be making your payments to them unless they do something down the road with that loan. I don't know if I can be any more specific for what you're looking for, but
good. I think it's really important that people understand the difference between government backed versus the thing. And even portfolio is a term that a lot of times people don't understand what that means. And one of the biggest things I would say is that you just said that you're always going to get to pay that payment to that company. And so often when someone has a mortgage, their mortgage may be sold 2 or 3 times, and it keeps changing who you pay. It can be very confusing, and it can also cause missed payments and all sorts of confusions. So it is really nice when you know that it's going to stay with the company that you ended up originally getting the mortgage from. So that was part of why I asked you to dig deep in that, is so that people can understand how does it, because again, the bottom line is what's in it for me when someone's listening. What do they need to know that to be able to make a decision on what kind of mortgage they want, or even what mortgage company they want to work with, or if they're going to consider working with their bank, and do they really understand the differences?
Sure. Sure.
That's a
And
point.
Jennifer, that's the critical difference I see in today's market. And it's so critically important. It's being able to have these various loan programs that we're talking about and presenting them all to a prospective home buyer in the marketplace, instead of you or me as a lender making up my mind, oh, they should only do this product and nothing else. No, you have to give them, it's fair, it's equitable, that you give them the opportunity to understand this is a huge investment. It's a ton of money. And it is the largest emotional purchase outside of marriage I think anyone will ever make in their life. So you have to present all the options to them, and even loan figures and numbers, so that they can get a full grasp and understanding of what that picture looks like. And then they can make a good decision.
Right.
And that's the bottom line. And that keeps us out of financial jeopardy.
Yeah.
By presenting all of the options and letting people make decisions based upon educated information. And
I have a question for you. So what about age? When someone gets older and they don't have a regular income like they had when they were younger, what is it that they need to have to be able to do refinances or to purchase a property if they haven't bought one in a couple years?
I'm going to ask you to be more specific, but for example, there is a loan program out there called a reverse mortgage.
Yeah.
Remember that old school term, reverse mortgage?
And a lot of people cringe at that one.
Yes, they cringe at it because of the evolution of that loan program over the last, are we dating ourselves? Over the last 20 years.
20 years, yeah.
I could go back further, but I'm just going to go 20. Over the last 20 years, that product itself has evolved in a tremendous way. But if you were around 10, 15, 20 years ago, you kind of cringed when you heard it, because why would I ask my parents to consider that mortgage? And now we no longer are considering that for our parents, but as we get older, now it's us that's making that consideration. And so a reverse mortgage is using the equity within the property to make your mortgage payments on a monthly basis. So that's one option. If someone else is growing in age and they're looking to purchase a home, but they have limited income sources, again, that's where a good lender conversation should take place. There are loan programs that are available. And if there aren't any available at this present time, then a plan can be put in place how to achieve that over 3, 6, 12 months, respectively, so that we just don't leave people in the dark.
Yeah.
We've got to educate the public, the home buying public, on what's out there. And when we do, guess what happens?
They make better choices. Yay!
Voila. Yeah, they do. They do. And you are the biggest endorser of the team concept. And so having a knowledgeable real estate agent, a knowledgeable lender, a knowledgeable financial advisor, a knowledgeable title person, title company. I mean, having that team as it pertains to real estate, not one single person in and of themselves is capable of providing everything that a prospective or home buyer needs.
I agree. You need everybody. And even when they disagree, that's when you get to decide what's right for you, because they're not all going to be the same. And that's something that is okay as well.
Yes.
I talk about it as the yay team. Everybody on your team should help you say, yay.
Yes.
Because, when I first got on radio so many years ago, I used to call it the A team. And then I changed it to the yay team, because everybody on your team should help you say, yay, your mortgage person, your real estate person, everybody, your attorney, they should all help you. And again, they may all give you different pieces of advice, and you have to kind of sort through and figure out which one is going to be the right one for you and for you at this time. Because again, it changes. And it's one of the reasons your team should be people that you keep going on and on and on. And it's a team that evolves over life. And when you have the major changes in your life, and I want to say changes because it could be a death, it could be a divorce, it could be a marriage, it could be the birth, it could be the birth of a child. You need to be able to talk to your mortgage person and say, hey, so is there something I could be looking at, or is there something I could do differently? Or because it's mortgage is just a financial instrument. It's something to help you, be able to have home ownership. So how can we do that? How can we utilize it? Well, it's by learning all the different products and figuring out which one is best for you. And that's one of the reasons I say, if you're listening to this and even the mortgages don't apply to you, think about who they might apply to and who could also benefit from knowing that there's a USDA loan that's 0 down, or an investor loan that you don't have to worry about, your tax returns. Because again, I know investors don't always, their tax returns are complicated. And, there was always that kind of who's interpreting my tax returns, because the tax code is so confusing. But knowing that the money is out there, there's plenty of money, there's not a scarcity. I think that's one thing that happens a lot is people start to get that idea. There's a scarcity and I'm not going to be able to get money to buy a bunch of real estate investing properties, and know what that is and be able to understand all the differences and the nuances. It's so important to be knowledgeable and to have your team members talk to each other.
It is. And Jennifer, today, we talked about investors, which I think are increasing in our marketplace. We talked a little bit about how the inventory levels are very low. And so there are more buyers fighting for properties at higher prices. But one of the other things I definitely think we should make mention of today is that I see an increase of self-employed now post-COVID. I'm calling it post-COVID.
It's done.
It's done. Yes.
It's done. Into existence.
Yes, it's done. So with that being said, Jennifer, there's a lot of self-employed borrowers out there. And we talk about building that yay team. They go to their CPA or financial advisors, and they get communication and information on how to do their tax returns this way. And then they do their tax returns this way. And then they come to the mortgage lender and they say, hey, look, here are my tax returns. And here's all my financial information, and I want to qualify for this house. And the lender says, oh, you don't really have an income here. And they go like, well, I made this much, but you wrote off this much. And well, this is what in my communications with my CPA that is best for my business. Great. And again, where you spoke a minute ago about not everyone on that team always having the same answer because there are different perspectives. Now me or us in the lender world, I'm not just speaking of me right now in Security National Mortgage. I'm speaking of loan officers across the United States. We then are placed into a situation where we go like, uh-oh, your tax returns don't show enough income for you to qualify to buy this house.
Yeah.
Now, depending upon who that bank or mortgage company is, they may not have an answer. So if they were talking to us, we have an answer. We have a bank statement loan for self-employed borrowers where they provide 12 to 24 months of bank statements. We analyze those very carefully, and we come up that based upon business deposits, we look at their an annualized and we put together an income average. Voila.
Voila.
It works.
It works.
And we have documented paperwork. Whereas years ago, you didn't have that. And so here we now have a bank statement program where we have 12 to 24 months of their business bank statements, whether they're a sole proprietor, a partnership, an LLC, or a corporation. And we evaluate those business deposits over that 12 to 24 month period, come up with a monthly income. We make sure that their credit score is also in line with the credit qualifications for that program. And we can then provide them a loan. And guess what? They don't have to go back to their CPA and try to figure out how to change those tax returns. Because if that's the kind of business they're running and they're meeting the IRS codes, they've got to make a decision. Do I want to purchase this home under this bank statement program, or do I? No. Again, presenting them with all the options gives them an educated ability to make a decision.
Yeah. And that's the thing is just understanding what are the options for people so that they feel really comfortable, making a decision, a good decision. Again, I'm always interested in people making a good decision for themselves,
Yes.
Given whatever their situation is at this time, because every time in your life is going to be a little bit different. And so make sure you have open communication. And that's one thing I wanted to touch on. I got one question through one of the things. So I have a question for you in a minute, but and I want to tell anybody who's in the room, feel free to raise your hand if you've got questions. Also, if you're watching us live on one of the other channels, feel free, you can message me. I do have one message already, but one thing that I find is that sometimes people are afraid to communicate, especially when it comes to money. So Scott, what would you say to someone who is sitting there thinking, I don't know, I'm ashamed of, something, or I'm afraid of the answer, I think is also part of the reason, but just also because a lot of people, it's cultural. In different cultures, you just don't talk about money. Yeah. And so unfortunately, that keeps people from knowing and having the information they need to be able to make good decisions I want to say in real estate and finances and money, anything to do with it. So what would you say to someone who is a little bit afraid to communicate about money?
Sure. The first thing I would say, Jennifer, is I understand. I really do. I understand. Yeah. Think about this for a second. And I know people are listening, but let's think about that, you and I, Jen, for a second. So someone's going to look at my credit history. Someone's going to look at my bank statements. Someone's going to see my pay stubs. I'm totally exposed.
Naked.
Like really, really, really. And so as a lender, with the understanding that that is a very vulnerable position to be in, both personally and professionally, you're dealing with folks just like yourself, because you're no different. You've got to be able to communicate that right up front. Hey, Mr. and Mrs. Jones, this is the information and the documentation I need in order to see how much of a loan you qualify for. If you have any questions, I'm totally available. And Mr. and Mrs. Jones, please understand, there's not any question that you can ask me. As I go through your credit report, I'm going to give you a call. We're going to go line by line. We're going to go through each item. I'm going to make sure they're legitimate first and foremost, and then we're going to go through them and see if there's anything that's not accurate so that you and I can be on the same page. And getting them to understand by sincerity and authenticity that you are not there just to do a transaction. You're there to help them buy a home, build a legacy. And that is not always said verbally, but that has to be communicated without being communicated, because people can tell when you're sincerely caring about what they are doing, and they're exposing themselves to you. And by the way, prior to them making that phone call to you, prior to you reaching out to them, they didn't know you. So they're in a very vulnerable position. So I've got to bring them home very quickly to a level of comfort so that they understand, hey, look, I'm here to help.
Absolutely. So well said. Very well said. It actually dovetails into my question that I got asked to ask you, and that is about credit scores.
Yeah.
And so with the credit score, obviously there's a difference between someone who is an investor versus someone who perhaps is a first-time home buyer. But one thing I've also seen is people who have a really high credit score, but they don't have the right kind of credit on their credit report. Does it make sense? Like they haven't, they haven't had long relationships. They're brand new, like they're brand new. So they might have an 800 score, but they don't really have, like they might only have a bank account and one credit card or something like that. So how does the credit report play in to your decision for a mortgage?
It plays into every decision. Because I keep saying this, but there are programs that are backed by the government, whether they be conventional, FHA, Federal Housing Administration, or VA, Veterans Administration, USDA, rural development. So everything is related to a credit score or a credit report, potentially, when these loans are serviced by a government entity or an investor that is responsible. Let me rephrase that. But these loans are serviced by an investor that is responsible for making sure they adhere to those government agency guidelines. So with that being said, someone comes and they have a credit, they have questions, they have a great credit score, but they only have one. Well, Fannie and Freddie actually give some flexibility to someone with only one credit score. That wasn't always the case years ago. That wasn't the case, but they do now. And in some cases, depending upon the length of time, if someone comes in and they have no credit score, do you know that there are programs available to someone with no credit score?
No, really? I didn't know that. No credit score?
So with no official credit score, then we can look at alternative sources of credit.
You mean like that would be somebody who's a foreign national who has no credit? Or is it a first-time home buyer?
First-time home buyer.
Really? Wow.
Yeah. So, I mean, again, the education piece is so critical. Once you start to have that conversation and getting that level of comfort established with that potential home buyer and getting them to let their guard down and communicating sincerely and with authenticity and saying, okay, I understand exactly what you're saying here. Let me help you. Oh, can I get back to you? I'm going to check a few guidelines. You check the guidelines, you come back and you say, guess what? There are some loan programs that are available for you with no credit score, but this is the route you have to take. These are some of the things we have to do. We've got to check a cell phone bill. We got to check your insurance history for the last 12 months. We got to check your rent history for the last 12 months, things of that nature. Yeah. And so being able to have a yay team, folks that are knowledgeable, whether they work for a bank, work for a mortgage company, it still has to be someone who's knowledgeable that can look at a situation and help make wise decisions.
Yeah. And that's part of it, is being able to look across it. And that's one of the reasons I want to bring it up, is that people often are so afraid of, well, I'm just not going to, and I think it kind of goes back to, again, that they've listened to the wrong people, and the people who are not experts having a conversation about credit scores, or talking to somebody about mortgages who don't understand mortgages and all the different flexibility there is for mortgages, because there's mortgages out there. And it depends on what your goals are, whether you're a real estate investor, whether we want to be a primary residence, what is your goal there? But if you don't communicate it, which is one of the reasons I wanted to bring up communication. I've recently found one thing I found, which you might have It'd be interesting to know if your team has had this experience as well. I think it's interesting with my clients. Every so often, some clients just default down to text messaging.
Yes,
And that is not always good communication, right?
yes, yes, yes.
So things can go a little bit awry if we're not communicating well. And yet it's interesting, and just
Hey,
specifically.
can I throw something in there?
Yeah,
I heard a conversation the other day. Young man was talking to someone, and he asked the person on the it was a phone call. He had received a phone call from someone, and he goes, "May I ask you a question? How old are you?" And the person on the other side of the phone call said, "Well, I'm 40 something." And the young man said, "Oh, now that makes sense, because people my age only text these days. We don't do phone calls." And so again, you got to reach them where they are.
yeah.
So SMS, text messaging, we've adjusted our systems so that we can reach that buyer public that likes text messages.
Yeah.
And that seems to be the way and the culture that we're moving in. But I didn't mean to cut you off. Yes.
No, and I agree. And I've seen that with so many of my clients as well. And it just really, sometimes it's not the best communication. And so my point of that also is just pick up the phone and have a conversation, and don't be afraid of the full conversation, because
Sure.
it's not always easy to get good communication in text
Text
message
messages.
sites. It's like, just take the time to really ask the questions. Okay, so I wanted to ask, I know John Lee's there, and John, you always seem to have great questions. I was hoping you might have a question for Scott today.
Sure. Thanks, Jennifer. Great stuff, Scott. Always good to hear about mortgages. That's one of my dirty things I love, is financing. I just got maybe two quick questions. First thing, I was wondering, how long is it taking in like underwriting right now from somebody that's fairly good? I know there's always things that come up, but from start to finish, if somebody brought you pretty much a complete set of facts today, about how long would it take? And the other thing, I was just wondering, anything that was, I know some people try to maybe not disclose everything, and I don't want to say they purposely hide stuff, but maybe they might forget something major. If you had anything that kind of sticks out that might be a little unusual. So thanks. And that's it.
John, thanks for your questions. I think I actually can handle those questions. They're not too difficult for me. So John, I appreciate that. The first one being, we can generally close a loan, and it's pretty much within the industry for most folks, but there are some anomalies out there. But from start to finish, if someone is purchasing a home or even refinancing a home, and they write a contract and go to closing, that's generally done within 30 days. Can you do it in 2 weeks? Absolutely. Can you do it in 3 weeks? Absolutely. But definitely within 30 days. That should be, I would think, that should be standard in our industry right now.
And there are some people who are saying it takes 6 weeks. So it is good, but as you know, it depends on whether it's a bank.
Can they call me, please? If it's taking them 6 weeks, just tell them to call me.
Union or certain places, it does.
Oh yeah.
It does definitely take longer, and that's the reason it is a very good question for anyone who's listening. That the timing part of it also can make or break you if you're in a competitive situation and a seller wants to sell fast versus not fast.
That's correct. That's correct. And then John's second question, when you have that initial conversation as a lender, when you have that initial conversation with a home buyer, someone looking to purchase a home, or someone who already owns a home and is thinking about refinancing, you always communicate your checklist of documents needed up front. And you make it clear, if you give me or get to me these items, this will be a smooth process. And there's always times that the checklist is given up front, and it should always be given up front. And make it clear, if you get these to me within the next 48 hours, 72 hours, we're going to be able to roll through this process. If there's something on that checklist, a bank statement, or a pay stub or something that they're concerned about, that question by the lender should always be asked. Do you have any questions or things that concern you right now at the beginning of this process regarding your credit report, history, your pay stubs, your income, your bank statements? Are you getting a gift? Is there anything that concerns you at all? And that way, if that question's asked up front, guess what happens?
You can
yeah,
out.
it eliminates a lot of problems down the road. Yeah. And again, you're establishing a comfort level. Going back to one thing else, Jennifer, I talk about playing in the sandbox, playing outside the sandbox. You are a realtor that does both. You know the normal guidelines, the traditional guidelines with all the traditional programs, VA, FHA, conventional, USDA. You understand that, but you then also understand, because you deal with a lot with investors and things that don't normally fit a box, you know how to play outside the sandbox. So it's very critical, and I think critically important, that home buyers understand who they're aligning themselves with to purchase a home and work with to establish that relationship. It's not about, are we doing anything illegal or not up to code or meeting the guidelines? It really is just providing you an opportunity as a home buyer with all of the options so that you can make wise decisions about the biggest investment you're going to have in life.
Absolutely.
And so, Jennifer, you are in the box and you're out of the box, the sandbox.
And I think it's really important to explain that to people, because understanding that, you know, as a real estate investor, we think very differently than a real estate agent, or I should say than like the traditional home buying process. And understanding, even like one of the classes I've actually taught and I love teaching, is when you're deciding to interview a real estate agent, or like each person who's on your team, if you're going to hire, and you and I have done similar shows on this, I have my 17 questions that I
yes, you do.
ask your mortgage person when you are interviewing them. And I say mortgage person because maybe it's a bank, maybe it's a credit union, you know, maybe it's a mortgage company like what Scott has. And Scott's done this with me. Go through the 17 questions and we dig deep so that you understand the point of the questions is to have a conversation.
Yes.
I have had people, and I think you probably even know one of these. I have had people who have emailed over the 17 questions and said, hey, fill this out and send it back. I'm like, there wasn't right or wrong answers to these questions. They were part of a conversation.
Yes.
You guys really get to know each other. This
Yes.
wasn't about you get an A or you get a B or you get a failing grade on this 17 questions. It's about opening up communication so that there aren't surprises from anybody. And I think that's really critical and so often overlooked. And the text message example I used with certain clients, they just keep text messaging, and it breaks my heart a little bit because I realize that they're missing out on so much communication because they keep just rushing through and thinking they got it all handled by text communication. And that's not true, especially when it comes to their money, their finances, and mortgages. So I just, you know, I am so grateful to you, Scott Shelton. Thank you so much for coming on and for always being so willing to talk about the different mortgages, what's happening in the market. So I'm going to end with my last question is, what is your prediction for 2022? What do you see happening? Interest rates going up, more products, less products? What do you see for mortgages?
Can I ask you a question real quickly? Do you want the economist view or the Scott Shelton view?
I want the Scott Shelton view.
I think we're still going to have a great year. Yeah. I really do. I know we have inventory issues. I know that we have, in some certain markets, higher appreciation rates prices taking place. But that all being said, I believe that we have a great real estate market, and we have an out of balance whack right now with supply and demand. We have a lot of home buyers with very few properties, and people want to buy homes, and people want to move up, and people want new construction. So that being said, we're going to have a fantastic 2022. So hold on.
Hold on. I think that's a perfect way to do it. Well, again, thank you so much for being with us. I always appreciate you. I appreciate all of your experience, your 30 years. You don't look like you've been at 30 years. You're so young. If anybody's watching us on YouTube, you can see Scott. So, you're listening, go ahead and go to YouTube. You can see Scott. And so, Scott, I know, will you go ahead and give them your information really fast? If they want to contact you and find out more about getting a mortgage.
Sure. I guess the best way to start would be my email address. That would be the best way. And then email me, and then I'll give you a phone call. So the email address is Scott, SCOTT .Shelton, SHELTON at S for security, N for national, M for mortgage, C for corporation. So snmc.com. Scott.Shelton at snmc.com.
Perfect. Thank you so much, Scott.